We are live, everybody. Welcome in. Thank you so much for joining me today. It is Thursday, October 12th, 1 p.m. Central. We have a couple of things to talk about. Let me know if you can hear me okay in the comments if you're joining us live, and if you're on recording, thank you so much for joining us. We have a couple of things to go through today, specifically the new pricing from Tesla for the Model 3 and Model Y, and also some news out of the legacy automakers, specifically the big three, specifically Ford, and the UAW strikes and negotiations that's going on with the unions right now. So without further ado, let's go ahead and get started. Yesterday, there was news from Tesla. They put out this post on X today, where in the United States, the Model 3 lease is now starting at $329 per month, and the Model Y is now starting at $399 per month. Now, if I go to Tesla's website and I dig in just a little bit more deeply, you can see that on the website. Let's see if I can zoom in a little bit more for you guys so you can see. The $399 per month lease for the Model Y includes $4,500 down at 36 months, 10,000 miles per year. So basically, for those that are not familiar with leases, you're able to lease a car, basically rent a car for up to, say, in this case, 36 months, which is 3 years, and you're allowed to do it for 10,000 miles per year. And if you go above that limit, you have to pay extra at the end of the term. Basically, that's what that means, in case you're not familiar. Now, the $399 per month is for the Model Y, and if we look at the Model 3, we can see that it's $329 for the same exact terms. So $4,500 down at the time when you start the lease, 36 months, 10,000 miles. Now, what's very, very interesting about this dynamic is that when you take that price and you put it against other cars out there, you start to see just how low down the pricing bracket Tesla's starting to get into, to the point where, from where I stand at least, Tesla is really aiming to be a mass manufacturer truly that is gearing for very affordable pricing. And this becomes very obvious and evident once we start putting it against, let's say, the most popular brand out there, at least in the United States, which is Toyota, and against their most popular brands like the Camry, Corolla, and Prius. But where I really want to hone in for this video to start is I want to compare the Tesla Model 3 with the new lease pricing to a Toyota Prius. And I think you're going to be surprised by the numbers that are going to come through. So if I go to Toyota's website and I go to their payment estimator for the Toyota Prius, if you're not familiar, Toyota Prius is a hybrid car. Little thing, I'm sure you know what a Toyota Prius is. I probably shouldn't explain it, but they have a calculator where you can sit down and be like, okay, how much would I pay for a Toyota Prius if I had the same terms as a Tesla Model 3? So I went in and I put in the same exact numbers. I did a $4,500 out of pocket, which is basically equivalent to the down payment, 36-month term, 3 years, at 10,000 miles allowed per year. And I'm using the excellent credit rating. For those that are not familiar, you can select different credit ratings for a lease or a loan. And if your credit is better, then you get better terms. Essentially, your monthly payment comes down. So for this example, I'm using the best, I'm just saying excellent, to give us the best pricing Toyota has available for this Prius. Now, if you qualify for that excellent rating, then it's $334 per month, and that $4,834 amount due at signing is the down payment plus the first month's monthly payment of $334 per month. So I just want to make sure that's not super confusing, but it's essentially $4,500 down, and it's 10,000 miles, and it's $334. So what's interesting there? The Toyota Prius right now, at least, it's $334 per month, and the Model 3 is $329 per month. And it's the same exact terms, 36 month, 10,000 miles, $4,500 down, as you can see here for the Model 3. And then if we look at the Toyota Prius, $4,500 down, 36 months, 10,000 miles, $334. This gets even more interesting when you start doing the math for the whole term. So if you go out 36 months, that's those 3 years. Once you start taking into account the fuel costs for the Prius and the electricity costs for the Tesla Model 3, because the Tesla is electric, while the Prius is a hybrid, but it still uses gas. So what does that mean? So let me go ahead and put it in a spreadsheet for you in case you like numbers, and hopefully you do. What I did is I took the two Teslas that we just talked about, the 3 and the Y, and I also compared it to the four most popular Toyota models, which, at least in the United States, are by far the most popular models out there that people buy outside of pickup trucks. So you have the Corolla, the Prius, the Camry, and the RAV4. That $329 per month for the Model 3 standard range, which is that one that we were looking at $4,500 down, 36-month term, which if you look at it from a monthly perspective, the 10,000 miles per year, it's about 830 miles per month allowed. And then if you do math around how much it costs to charge the Tesla for those 36 months at an average of 830 miles per month, and you assume that the Model 3 is getting about 0.25 kilowatt hours per mile, which is basically the electric vehicle equivalent of efficiency. It basically means for every mile that I travel, I spend 0.25 kilowatt hours. And then you assume 14 cents per kilowatt hour, which is the US national average for electricity. Your 3-year fuel cost for the Model 3 is about $1,000.50. And so if you go 36 months out at $4,500 down, $329 per month, and you add in the fuel costs, the total cost for the Model 3 is $17,394. And if you do the same exact math for the Prius, we look at again how much Toyota was quoting us for the 36-month lease, $334 per month, $4,500 down for 36 months, 830 miles per month allowed, 57 miles per gallon because it's a hybrid, so you're going to get really good efficiency for a gas car at $3.85 per gallon of fuel, which is the US average. The 3-year fuel cost for the Prius comes in at $2,026. And if you add it to the total of the monthly payments, then it's $18,550. And you can see right there that the cost of the Model 3 is actually cheaper over 3 months, not just on the monthly payment, but also an all-in cost when you take into account fuel, even though the Prius is very gas efficient. The Model 3 is about $1,200 cheaper, which is roughly $20 to $30 per month. Now, if you compare it to, say, a Corolla, this is like the base model, cheapest Corolla you can buy, and you go out there and find the best leases available, which I did, at least in my area, might be different for you. $259 per month, $4,000 down, same 36-month term, same mileage limit, 34 miles per gallon because it's not hybrid, at a $3.85 gas cost per mile, or per gallon rather. Then the 3-year fuel cost for the Corolla is $3,396, which after 3 years and the monthly payment and the down payment is $16,700. But if you wanted to compare it to a Model 3, the Model 3 is only $19 more a month to lease a Model 3 with all-in costs after 3 years than a base model, the cheapest you can find, Toyota Corolla. So there's only a $19 difference between the two models. And if you compare it to the Model Y, which here is very interesting, the Model Y after 3 years is cheaper than a Camry and an RAV4. And the RAV4 is one of the most popular, I believe is the second most popular SUV in the United States, behind the Tesla Model Y. And I think it's becoming obvious why. It's because even though the RAV4 is a gas car and it's very efficient, the Model Y is still it's slightly cheaper over the course of 3 years, but it really highlights how much cheaper Teslas have gotten versus the competition. I think this is super interesting. This is super interesting. Last year, if you look at 2022 and the craziness with COVID, you couldn't get a Model Y for freaking under $60,000. And now you have a Model 3 and a Model Y that you can get for under $400 a month, including that $4,500 down payment. And if you compare it to the most popular models out there in the US with the Toyota models, it actually comes out cheaper in most cases outside of the Corolla, which is still the king of efficient, or dollar per mile for now, it seems. But yeah, it's pretty wild stuff. Now, the one thing I want to highlight too is that starting next year, I had a link for it, I don't know where it went, but I want to highlight this for you. Starting next year, the EV tax credit for those two cars will likely go down from $7,500 to $3,750, which, unless Tesla is able to figure out how to make the financing cheaper, those monthly payments will likely go up starting next year, because that $3,700 difference is baked into the lease price right now. So just giving you a heads up in case you are interested in taking advantage of this, but if not, obviously that's completely fine too. Just wanted to get you sort of caught up on that. Super interesting stuff. Let's cover the UAW news next with Ford. Do drop some comments in the comment section below for me to sort of answer if you want to make any comments. I'd love to interact with you once we cover the UAW Ford news. But yeah, let's go ahead and get into that now. So in case you're not familiar, Ford, UAW, Stellantis and GM have been going back and forth on a new deal for the union, which is the staff that basically works at the factories and a bunch of other places for these auto manufacturers. And yesterday there was a surprise strike from UAW. Ford calls strike expansion grossly irresponsible after 8,700 people joined the picket line. But what's really interesting about this news is that these folks are from the Ford, Kentucky truck assembly plant for Ford, which is by far their most profitable and largest plant in the United States. This plant is huge for Ford. If we go a little bit further into the article, Kentucky truck assembly plant, which makes heavy-duty pickups and large SUVs, which again are very profitable, is Ford's largest and most profitable plant. It brings in about $25 billion a year. Now, this is revenue. It's not profit. However, if we compare it to Ford's total revenue for the year, it kind of gives you an idea of how big of an impact this is. So in the second quarter of 2023, Ford brought in $45 billion of revenue. So if you times that by 4, it's what, $180 billion in revenue for the whole company most likely is going to come in for 2023. And if you divide that 25 into that number, that 180 or whatever that number is, then this plant alone, that Kentucky plant, is roughly 10 to 15% of Ford's total revenue that's being impacted by this one strike that the UAW has called. And the reason why that's such a big deal, at least as it pertains to Ford and GM and Stellantis, is that, especially now with Ford, one plant is likely going to impact, if they don't get this figured out immediately, it's going to severely impact Ford's ability to make money on its business selling its gas cars. This is in tandem with their electric vehicle division, which, if you're not familiar with, is losing money every single quarter, and it's likely accelerating as they're ramping up their business. So as of the second quarter, if you follow this channel, you're familiar with this, you can see that Ford lost $1.1 billion in its electric vehicle division just in the second quarter of 2023. It's normal for these companies to lose money as they ramp up their EV business because it's just part of the process. They have to go through this pain. But the timing kind of sucks because now the UAW has gone in and said, hey, screw you, I'm going to limit you from making money on the things you can make money on while you're losing more money on your business that you're trying to ramp to compete with the likes of Tesla, while Tesla is dropping prices and making cars just as affordable as a Toyota Corolla or even more affordable than a Toyota Prius. So what a freaking crazy time it is in the auto market right now. It truly is wild stuff. And yeah, I would love to hear your thoughts in the comments section below, because I just don't see, even if Ford arrives with a deal to the table, especially after the UAW is willing to bring down Ford's most profitable plant, it likely means that they have to make concessions that they don't want to make, which are going to make their costs go up even higher, which is going to make it even more difficult for them to turn a profit as a company moving forward, or at least keep the same level of profits in the long term. If the UAW is willing to hit your most profitable plant, they probably have a strategy that's going to be quite cutthroat to get what they want. And it's sort of is aligned with one of the leaked emails that came out early during this negotiation between the UAW and the Big Three, where there was a leaked email that basically said from the UAW, we're going to make this long and painful. We're going to make them, I forget the exact words, but we're going to embarrass them and all that stuff. And it looks like some of these actions are really lining up with that. And I would hate to be an executive for any one of these three companies. It's a tough situation to be in. I feel for the workers that feel like they deserve to get paid more money. I'm always for people getting paid more money. But the unfortunate reality is that these legacy companies, especially in the face of stiffening competition from the likes of Tesla, it's going to become harder and harder for them to make money as their gas business shrinks and their EV business grows while losing more money, while you have a union that's impacting you from a cost perspective by making your costs go up even higher. So if you set aside if this is a good or bad move for the workers or for the company, the reality of the matter is, from a business perspective, this is a lose-lose situation for the company. Regardless if there's a strike or no strike, your costs are going up. If your factory is shut down, your costs go up because you have no sales. If your strike stops but your costs go up, your costs go up. So then you have to figure out how to bring them down. Yeah, so it becomes a whole mess. So yeah, I'd love to hear your thoughts. Let's do some Q&A here for a little bit, and then we'll see what you guys are thinking about. John, just some info for tax credits. Maine now has a $7,500 tax credit along with the government $7,500 tax credit for $15,000. That's wild. This is probably the state EV tax credit. I didn't even know they had $7,500. That's huge. I know Colorado has $5,000 on top of the $7,500. And the other interesting thing is that for loans starting next year, that credit, the $7,500 credit, is going to come out of point of sale. So not leasing now is cheap, and then financing is going to get even cheaper next year because that credit's going to be baked into your monthly price instead of it being as a credit at the end of the year. And then your liability goes away. Here's another interesting thing about this tax credit for next year. Your liability goes away, is my understanding, which means that right now, you could only claim the credit if you owed $7,500 at the end of the year or more, and your income was, I believe, around $300,000 or less if you're married, filing jointly. Starting next year in 2024, how much you owe in taxes goes away, and it's strictly based on how much you make. So say for some reason you owed zero taxes the previous year, and you're making less than $300,000 a month jointly, or $150,000 as a single filer, you're going to be able to get the $7,500 credit, even though you owe zero from a liability perspective. Somebody check me on that on the comment section below. But I'm quite confident that is correct. We're still getting some information from the IRS for this, but that's what it's looking like. But please do confirm that's the case for me. If I'm wrong, I'm wrong. Please do your research, but I believe that's the case. So yeah. Question, not really a question. Thanks, Breakfast Pizza. But just finished a work lunch, and 2 coworkers plan on getting Tesla soon. I convinced both to add on FSD. I don't think ads are needed. Okay. Well, great job, Breakfast Pizza. I hope they use your referral code. And yeah, that FSD thing is going to be wild. It's going to be wild. Tony, longtime supporter. Thank you, brother. Do you think a less than $25,000 Tesla could be the best seller, even if there were a 2-door coupe or had less than 200-mile range, or both? Yeah, I think the compact car in this case, I think as long as it is the cheapest cost per mile and it has no maintenance, essentially, I think it will be the best-selling car easily. I think there's too many people, especially here in the United States, that live paycheck to paycheck and are trying to just freaking survive and pay their bills. Freaking food prices are through the roof, rent prices are through the roof, and any relief they can experience is going to be great. So I think a market for a transportation unit, let's say, that gets their monthly cost to come down is going to sell like crazy. Absolutely crazy. And we're getting clues as to where this pricing is going to be, knowing that the Model 3 right now at $38,000 MSRP is coming in at $329 per month. You knock down the starting price to $25,000 like the compact car, and you retain that $7,500 tax credit because of the federal EV tax credit that's in place, because all your batteries are made here in the United States for that compact car. Man, that monthly payment is like, what, $200? I don't know. I'm speculating, but who wouldn't buy a Tesla, or who wouldn't lease a Tesla for $200 a month or $250 a month? That's the kind of question. That's the kind of question that starts going through my head, and I would love to hear everyone's thoughts. But that's how I think about it. Oscar, how you doing, my friend? Question: would suppliers continue to get hit? Would this then affect non-GM Ford, Stellantis automakers? Fantastic question. So, if Ford is shutting down its biggest plant for now, this means that all the suppliers that have employed for, say, the trim, the transmission, the catalytic converters, the plastics, whatever they're using, the harnesses, the chips, so on and so forth, theoretically, these suppliers are going to have to either shut down or keep inventory and try to sell it at a lower price. What I think is going to happen here is for companies that are not heavily vertically integrated, they might be impacted by this slightly, but you have to remember that these suppliers don't just supply Ford, they supply a bunch of different companies. So if anything, it might lower the costs of these parts, because these suppliers don't want to really shut down. They'll probably want to deplete their inventory, which will lower which will probably lower the cost of those supplies instead of them shutting down the lines. But I could be wrong. They could take a different approach and say, you know what, it makes more economical sense to shut down the lines instead of selling it at a cheaper price. So we're just going to hang on. The other thing to remember too is Q4 is the biggest quarter for car sales on a cyclical basis, the fourth quarter, because, Christmas specials and Thanksgiving, all that stuff. So I believe there will be demand for suppliers to sell their stuff. But yeah. So, but all in all, if you think about Tesla specifically in this case, they're not going to be impacted by this likely because they're quite heavily vertically integrated, and the other brands will broker deals with the suppliers to keep their lines open, and then they might say, hey, you know what? Instead of sending me 4 months supply, send me 8 months supply, and I'll pay you a little bit of a discount so you can keep your lines open and you don't have to worry about Ford. That's the kind of thing I think we'll go through. They'll negotiate, but I don't think it's going to be super impactful, but I could be wrong. Alex, the EV competition in China managed to increase quality a few years after Giga Shanghai opened and built their supply chain. Will the same happen in Germany and Texas? I would be surprised if it doesn't. We're talking about Tesla specifically here. Really, with any automaker, quality improves the more you do the thing, right? I mean, it's not just a car thing. Just think about anything you've ever done in your life. The more you do a thing, the better you get. And this applies directly to car making as well. So I would be shocked if quality doesn't improve over time, especially with a company like Tesla, who's obsessed about sort of improving stuff mid-year instead of waiting for model years. So yeah, I would expect that to be the case. But I would expect that to be the case with any automaker, not just Tesla, right? So that's the beauty behind practice. That's why they say practice makes perfect, right? Let's see. First set, the executives could single-handedly save the company by lowering their own wages from 30 million to like 1 million. That's not a bad wage, guys. Workers have been falling behind for too long. Yeah, I appreciate the spirit of this comment. I think this is my personal opinion now. Let's make sure that's clear. So I think there's definitely been a sort of growing gap between folks at the top and folks that actually do the work. In some cases, it's a bigger gap than others. The one thing to keep in mind is that oftentimes these executives are paid mostly on stock compensation, which is directly tied to how the company performs. However, in the case of, say, a Ford or GM, even if they say they went from 30 to 1 million, let's say there is, I don't know, 100 executives that are getting paid $30 million. And then you say, you know what, let's go down to $1 million. That's 30 times 100 is $3 billion. That $3 billion, if you compare it to Ford's revenues, it's 180 billion. So it's only like, what is that? It's like 2% of Ford's revenue that you would theoretically save. So in the long term, even though executives lowering their costs theoretically would pass down to the consumers, then you also have to keep in mind that you have this gigantic behemoth of a corporation that's losing more money as they ramp up their EVs, and they're going to have higher costs, which is cause them to have less profits. So it's this weird, complex formula, and in my opinion, really highlights that it's not just like paying workers more. The company has to be able to pay workers more. And I think in the case of the big three and the legacy automakers, for the longest time, and this is sort of highlighted by companies that are around for a really long time, you get companies that get really comfortable with where they're at, and then they keep doing the same thing over and over again. They're not really innovating, and then you're stuck with a technology or cars that are not making that much money because you're just making the tiniest little things, so trying to squeeze out every single cent you can every quarter instead of coming out with something game-changing that can actually bring you a ton of money. And then you have a situation here where executives are like, well, instead of paying our workers, let's figure out how to raise the stock price and how to eke out costs by keeping everybody's costs the same, and then no wonder the UAW goes crazy, right? So it really highlights just I think it's a mismanagement of a company instead of forcefully not paying people, right? Even though not paying people will lower your costs, it's still really highlighted by just what it means to be mismanaged, my opinion. And I could be wrong, but that's how I think about it. I really appreciate the thought process, though. I appreciate it, and thank you for commenting. Really appreciate you. Anthony, thank you so much for the $10 super chat, man. Appreciate you. Don't really care when Tesla gets to 1,500. More curious when it will get off the up and down 250 range. When do you think the next real change will happen? It's total speculation, not investment advice, not financial advice. I think for Tesla stock to actually make a serious move, we are probably waiting for full self-driving. I think outside of full self-driving, it's just going to go with the markets. It might get like a momentum bump from, say, the Cybertruck launching or some breaking news or something that might move the stock short term. But in my opinion, for it to have really that massive step change that it's had multiple times in its past, it needs something like full self-driving to really change the paradigm of what it means to own a car or not own a car in this case, right? So that's how I think about it. We have another super chat. Thank you, Anthony. It's just throwing out dollar bills out here, man. Thank you. Can't respond. Just realized I've never been subbed. LOL, 3 minutes to go. LOL. Okay. Well, thank you for subbing, dude. I appreciate you. I appreciate you very much. Super, super cool. All right. Executives should get paid minimum wage plus stock options. Yeah, I mean, I believe that's Elon's compensation package. It's minimum wage plus stock options. I generally feel that workers getting paid in stock options is super good, regardless of, and this is how Tesla did it when I was there. It doesn't matter if you're a factory worker or a janitor or whatever. If you're employed by the company, you get stock after a certain point. And I feel like that creates buy-in, because what that basically means is if you're a worker and you make any change to make the company more profitable, more successful, the stock will go up, which means your wealth goes up. Seems like a good deal, right? But the opposite of that is a lot of people live in a place where they can't wait. They can't wait for that stock to vest and for them to sell it. When you're living paycheck to paycheck, that salary becomes almost existential. But if you're able to wait for that stock, or you're able to leverage that stock long term, that's going to create you so much more wealth. It's like I think, again, not financial advice, but I think about it as a delayed bank account, like a savings account that has a potential to have an interest rate that's like the best in the world. But that's depending on what company you're investing in and how much money you have. But it's really dependent if somebody can sit down and, like, you know, be okay not getting paid, say, $30 an hour or whatever it is. So it's complex, man. And everybody's different. Everybody's situation is different. And it's, yeah, it's wild. A neighbor couple who likes EVs, per Johan, thank you so much for your comment, by the way, longtime supporter. A neighbor who, let's try again. A neighbor couple who likes EVs will not buy a Tesla because they say Elon is evil. Another neighbor who wants an EV knows nothing about Tesla cars and says Elon is crazy. Yeah, I mean, that's the thing. You know, it's going to be impossible to get everybody to like the thing you like, especially the bigger it gets. I mean, think about, like, if I use myself as an example, like, I'll use Apple. I used to hate Apple. Used to hate them because I was like, no customization, super expensive. What the hell is this anyway? And I would just buy Androids because I just hated Apple. And then after a certain while, I'm like, okay, let me just set aside my personal biases. And let me think about, okay, what is actually better for me? Like, from a cost perspective, value perspective, and what I get. Then I ended up buying an Apple phone, and I haven't freaking set it down since because it just works for me. I think in the world, like in the Western world specifically, I think this is a very Western world thing, is that people, especially in rich countries like the United States, people can afford to put their moral compass ahead of the cost-benefit analysis, meaning that if you're somebody who thinks that Elon Musk is a really bad person because of how he behaves or what he says or his political leanings, right? And you have a bunch of money in the bank, you're like, you know what? Screw you. I'm not going to support you because you do not align with how I think about the world, which everybody has a right to do that. But most of the world, like, I would argue 95 to 99% of the global population doesn't think about that. They think about, what is the thing I can buy that's going to make me the happiest right now? Or it's going to make me the happiest in the future, or it's going to allow me to save money for my family, or it's going to allow me to save money for myself, or it's going to allow me to get an extra meal, or it's going to allow me to be more happy while I go to work, so on and so forth. That's the equation for most of the world. And from that perspective, how Elon behaves or what people think of him, in my opinion, doesn't matter, because that's just what it is. Outside of something like completely insane, he comes out and starts doing some horrific stuff, like not just saying what he has been saying, but truly doing some horrific stuff that people are, let's say half of the world's population are like, this is insane. I just think this is a very isolated incident, what you're describing. In my opinion, it's sort of like a bubble thing. I really, truly do think so. And cars like the Model S or the Model X will likely suffer from that opinion more than the 3 and the Y, because at those levels, people, again, can afford to put other things above of buying something that could make their lives better. So my opinion, but again, people can just buy things based on whatever they like, right? But when I think about the impact to the brand, that's just what it is. And the more popular something gets, the more net number of people will think that way. But then on the flip side, you also have more people that will buy that thing that never would have before. And in my opinion, that's why you have the Tesla Model Y being the best-selling car in the world, and the Tesla Model 3 and the Model Y, and Teslas in general, having the highest loyalty still in 2023, even after all the stuff that has happened with Elon and Twitter and X and all that stuff. So that's my opinion. So, okay, let's end it there. 30 minutes in. Thank you guys so much. I'm going to start doing these a lot more often. They're so fun. We have 1,000 people watching, and I'm going to leave it there. I hope you have a great rest of your day, and we'll see you on the next one, probably tomorrow. Love you guys. Bye-bye.